Hello and good evening, friends. How are you all doing today? Welcome to weekly mastermind session of Ask Abhishek Raj show. Once again, I'm here to gear you up with all that you need to know for this week and the current market, how exactly things are shaping up, how you should be planning your portfolios, whether you are an intraday trader or you are a long-term investor or a short-term trader. You need to be geared up with all the possible scenarios of the market, what may happen, what may not happen, so that you can manage your trades positions accordingly. So here I am here with the data, everything that you need to know to manage your positions. So let's quickly go back to the system and see. Let me share my screen and take you to the market actions that you should be planning and preparing for in this particular week. So let's start with the weekly data snapshot. Let us see what has happened in the previous week. Uh, Again, overall, the markets were extremely positive. Few indices like media, pharma, IT, energy, FMCG didn't do much well. They are in kind of consolidation. They have done a massive rally. They have given great returns, humongous returns. So they are in kind of consolidation range. Rest, our top picks were banking and finances, automobile and metal. They have done massively well. Nifty rose over 1%. Bank Nifty rose over 2.71%. Autos about 4.5%, PSU banks over 4%, reality approximately 4%, metals approximately 3.5%. So overall, it was a good week. But again, if you compare with the last week, in the last week, we had all the indices green. None of the indices were negative. However, in this week, we have some indices negative. Anyways, volatility is down. So that's also one thing. Fear factor is settling down. Now, let's take a look on how indices look on the charts and what exactly you need to be planning for. Remember, we are entering the last week and expiry week of the month of November. If you take a look on Nifty, this is the Nifty chart, monthly chart. We have given a breakout above the all-time highs close of 12,440. We want Nifty to close on the monthly basis, that is in the month of November, above 12,440. RSI also looks pretty much well. RSI looks like coming above 60. So in case we see a closing, a strong closing above 12,440, Nifty will turn long-term positive and we could be headed for another rally. I would say next 4 to 5 months can make you great amount of money. However, in case we get a closing below this level, we could be headed for some correction, some retracement. Now let's take a look on weekly chart because that's where the interesting things are shaping up. I have two charts on weekly basis for you. Number one, this is the weekly chart. Three things that you need to take a note on. Number one, Nifty is currently trading, doing a band walk, that is trading above the Bollinger Band. So in case this continues, it's extremely bullish. Momentum is positive and bullish. That's not at all a question. Now, one thing that's, as I said, three things that you need to note down. Number one, doing a Bollinger Band walk, so it's good. Number two, if you look at the last candle, it's an indecisive candle. Usually it's called a hanging man candle. In case any closing below this level happens, it would be a reversal. So this week is going to be very, very important. This week, we want Nifty to close above the last week. One more thing, this hanging man candle is being supported with volumes. Volume has been higher in last two trading sessions. So now let's take a look on another chart of Nifty. This is again the chart of Nifty where you can see this line, this thin white line. This is the trend line. Trend line, that even a rising resistance trend line. Now this rising resistance trend line is where Nifty is currently closed in the last week's session. In the last week's overall candle is kind of spinning top candle. So it's very important for Nifty to close above this level, else we could be headed for a small retracement or a correction. One more thing, the last three candles, if you combine two big green candles and one small candle, this is an advanced halt pattern. This pattern is not bearish. This is a kind of, consolidation pattern. Now, in this pattern, this basically signifies that the bulls that had been riding the rally, they are kind of getting tired. So maybe we could see some sideways markets, some sort of consolidation in the incoming few weeks, and then markets may advance once again. Now let's take a look on the price numbers that you need to watch for buying or selling. If you take a close look on Nifty, the current trading range, the current band between which Nifty is trading, it's on day before yesterday's session, what had happened on Thursday, Nifty made a kind of reversal candle on which Nifty had made all-time highs, plus it closed negative as well. So that's a reversal candle. It's going to be very, very important. So the high of the market was 12,960. However, on the fall, Nifty took support on the rising window. That's a gap support around 12,729. So this is going to be a trading band. Consider this to be a no trade zone between 12,729 and 12,960. Should be your no trading range. Any breakout above or below, you must be trading. Now let's take a look on Bank Nifty. Once again, Bank Nifty is more interesting. The high of previous week, rather the month of November, that's of course in the previous week. So that high is exactly the same, the highs of the March candle, monthly candle. So it's a very, very crucial range. The price is 29,800. In case you have long position, you can still wait for some more time, but in case you are planning to enter now, I would advise to enter into any banking stock in case you see a breakout above 29,800. Else just wait and watch. On weekly chart, one thing very good that has happened, Bank Nifty is now trading above 78.6% retracement level of the entire fall. So more or less we are doing very good. Plus Bank Nifty doing a band walk on Bollinger Band, that's great. RSI above 60, that even great. So more or less Bank Nifty is completely bullish. But again, it's a similar thing. Last three candles, if you look at, two candles are very strong. The third candle is kind of small body candle. So more or less bullish momentum is kind of taking a halt. Daily charts are even fine. More or less the range that you need to be keeping is 28,700 on the downside and 29,800 on the upside. So Bank Nifty, you go long above 29,800. More or less you should be waiting for a proper 30,000 breakout. On the downside, you can think about some exiting, some profit booking, or even short trades. Not recommending you short, but yes, depending upon real-time situation, we may think even of short trades. If Bank Nifty goes below 28,700, apologies for this typing error, it's not 88,700, this should be 28,700. However, that's about it on the daily chart. Now let's take a look on some stocks. Now before I move on to some stocks, one thing you need to understand, markets are not only about the numbers. You need to have a holistic view, something that's very important for you to understand. You should always follow a top-down approach. Now what is a top-down approach? Top-down approach simply means you first take into consideration a broader market picture, a broader holistic market view. Then you go by looking into the sectors, what sectors are good, what sectors are bad, where you can have the opportunity. So once that has completely done, once you have your overall market view, overall sectorial view, then you get into stock trading. So with this message, I'm going to share the stock recommendation basis your market planning and risk management. Go ahead. These are going to give you massive, massive returns. Now, HDFC Bank. Above 1388, you should be going long. 1311, it has given, rather 1311 is the price where it completed its cup pattern. Then we have a Bollinger Bank upside breakout as well, a band walk as well. So HDFC Bank, you can go long, you can have stop loss around 1275, and the targets are surprisingly approximately 1900 to 2000. See, whenever there is a cup pattern formation, the targets on the upside would be the depth of the cup. And the depth of the cup, I would say it's 750 on the upper side, 1300, more or less 600-700 points, a deeper gap. So in case it continues further, HDFC Bank could be headed toward 1900 to 2000 price range. Titan once again, a cup pattern, similar targets, similar returns that you should be expecting. You can keep your stop losses around 1300, targets would be 1900 to 2000. You can buy on breakout. Again, this is not a buy, this is a conditional buy trade. You have to keep it on radar, buy in case it sustains above 8800 to 1400 range. This is the range which it needs to break for you to enter. RSI above 60, volumes are supporting the Bollinger Band walk, so everything is perfectly fine. You can go long into this stock. Once again, this stock can give you returns up to 50%. Tata Motors. Tata Motors is something that we had discussed in last week as well, where I had told you it's forming a triangle pattern on weekly charts, and you can trade in case the breakout happens above 150, 52, 53. So that already had happened. It has already given a good return. But yes, from a longer term perspective, you can be buying this stock. This stock has potential to go back to 200 to 250 range. But yes, do remember 200 is going to be an immediate resistance. RSI is positive, triangle pattern breakout, uh, volumes are showing strong. So overall, it's a good trade. You can go with Tata Motors. Now, let me share some sectorial views with you. Sectorial views: auto bullish, energy sideways, financial services bullish, IT sideways to bullish. You have to wait for some breakout. IT is kind of consolidating, but above 20 days moving average. So you need to wait for a bullish confirmation to make fresh entries. Metals are bullish, however, they are overheated. I would not personally recommend to enter right now. You should wait for a confirmation on markets, whether we are getting a breakout on the upside or a downside. Pharma sideways to negative. So that's about it. What all has happened in the market. Let me just also share about our last week recommendations that we had given you. Well, in the last week, we had Larsen and Toubro, that's positive above 7%. We had, Larsen and Toubro, plus we had some more stocks, like where the file has gone. Just a second. Okay, here it is. So last week's recommendations: Tata Steel, which was buy above 500. So it opened above 506.7. So I have considered 510 to be your buying range, and it's almost 4.3% positive. Hindalco, it's positive by 2.4%. Larsen and Toubro positive by 7.8%. This week's recommendations: HDFC Bank, Tata Motors, Titan, awaiting trigger, which means it's not a buy call right now. You need to wait and watch, and accordingly you can go long into it. So before we sum up, before we end this particular session, I want to remind you once again, don't forget, you should always, if you want to make money and do good in the markets, you want to stay protected from any gaps, any kind of mishappening in the market, if you want to save your portfolio, always follow top down approach. See, at times it would feel like you have missed out the rally, but again, my friend, markets don't close ever, and you never miss out on any rally. So top down approach simply means, I'm summarizing it for you. First, you need to have a broader market view, whether you are bullish or bearish. Unless and until you have a clear view on market that's bullish or bearish, you should not even trade. You should not even think of trading. Then you get into, let's say that you have a bullish view, or let's say you have a bearish view. Then you look into the sectorial views, which sectors are bullish, which sectors are bearish. As per your overall market view, you filter out the sectors which are in sync with your overall market view. Then you go to the stocks within those sectors. So with this approach, I am personally on a view that I would be buying in case Nifty gives a breakout of the previous week's high or a breakdown below the previous week's low. So accordingly, trades would be managed. So with this message, that would be all. Hope this is going to help you in your trades and your positions. If you have any questions, doubts, queries on any stocks, feel free to reach me anytime. Thank you so much. Abhishek Raj signing off. Stay healthy, stay wealthy.